Welcome to Woods of Stardon. This is CH. I will be covering the LionGlobal Singapore Trust Fund in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the Amundi Prime USA Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos, and I'll be happy to work on it as long as I can find enough information on the product. LionGlobal Investors is a Singapore-based asset management business that was rebranded in 2008 from Lion Capital Management and is the result of the merger of the asset management businesses from OCBC and Great Eastern in 2005. OCBC is the second largest banking group in Singapore, while Great Eastern is the largest and oldest life insurance company in Singapore and Malaysia. Great Eastern and LionGlobal Investors are both subsidiaries of OCBC. LionGlobal Investors currently has about 79 billion Sing dollars of AUM, with core competencies in long-only mutual funds and ETFs across fixed income, equities, and multi-asset solutions. Given the nature of the setup, there is a notable tilt in the product offerings towards servicing OCBC and Great Eastern entities, although there are efforts to expand its distribution channels. LionGlobal Investors also has several collaborations with other local and overseas financial firms to launch market or thematic focused products. The LionGlobal Singapore Trust Fund is set up as a Singapore open-ended standalone unit trust, meaning it doesn't fall under a fund family and the prospectus covers only this one fund. The fund is registered as a MAS authorized scheme, which means it is suitable for retail investors. The LionGlobal Singapore Trust Fund indicates in the fund webpage that Erica Lau is the manager of the fund. Erica's bios can be found in the fund prospectus that states she is a portfolio manager under the Asian equities team. Interestingly, while she has over 22 years of industry experience, it is mentioned that she previously covered US equities. There is no mention on when she transited from US markets to Singapore markets, and it is rather uncommon for a portfolio manager to change geographical coverage. The prospectus also indicated Kenneth Ong as another manager for the fund, who is also part of the Asian equities team. He has 17 years of industry experience and seems to be specializing in Asia markets. Morningstar shows that Erica started managing the fund since 2014, which provides stability to the fund in terms of manager style for the past 12 years. Prior to 2014, there had been quite a lot of manager changes, so it seems the team had gone through some tough times back then. On a separate note, there is no mention of Kenneth in the Morningstar information, so I am not sure how involved Kenneth is in this fund, or if Erica is actually running the fund as a sole manager. The LionGlobal Singapore Trust Fund is a pretty straightforward investment product. This is an actively managed Singapore equity solution that aims to achieve long-term capital appreciation. The fund invests primarily in equities of Singapore-based companies and to a lesser extent, overseas companies with significant business presence in Singapore. The team adopts an investment philosophy that Asian equity markets are inefficient, and therefore believes it is possible to achieve consistent long-term returns through in-depth fundamental research with a focus on valuations and identifying catalysts for stock price movements. The prospectus provides some details on the investment process in the form of bullet points, which is clean and straightforward to understand compared to most other funds having lengthy, legally phrased paragraphs that are hard to digest for investors. The fund runs mainly a fundamental bottom-up stock analysis, in particular examining and identifying potential drivers for stock price movements. This is achieved through direct company management contact and detailed research efforts. The potential drivers come in three categories that are business, management, and valuation. Here are the bullet points for different considerations under business category. And here are the bullet points for management and valuation categories. It is interesting and rather uncommon to see this information provided in the prospectus, which I think is good as it helps investors understand the stock selection considerations better. While the fund is mainly bottom-up driven, it is mentioned here that the portfolio construction process does factor in top-down macro views, including sector and thematic aspects. Individual position sizing seems quite flexible without any limits, and is based on various factors including expected risk and return considerations, and market cap and liquidity of the stock. While the fund is actively managed, it has defined a benchmark that is FTSE ST All Share Index for performance comparison purposes. As investors, we would expect the fund to be able to outperform the benchmark across market cycles. While not mentioned in the prospectus, the fund fact sheet states that the benchmark was only recently changed in March 2026 from MSCI Singapore Index that had been used for over 25 years. The MSCI Singapore Index is a very concentrated index with only 16 constituents. It also has non-Singapore listed companies such as SEA and Grab that some investors think are less Singapore focused and more like global or regional companies. The FTSE ST All Share Index is like an expanded version of the popular Straits Times Index, encompassing about 100 stocks that include smaller local companies. Changing the benchmark from MSCI Singapore Index to FTSE ST All Share Index suggests that the fund strategy is shifting from a large cap focused strategy to an all caps strategy. FTSE ST All Share Index, however, currently doesn't have any ETFs tracking it, so we will probably have to use STI ETF for performance comparisons later. The LionGlobal Singapore Trust Fund is one of the oldest actively managed Singapore equity solution in the market, having incepted more than 36 years ago in 1989. Fund AUM is a very decent 1.4 billion Sing dollars. Portfolio information is found only in the fund fact sheet, that includes the sector breakdown and top 10 holdings. Comparing to the benchmark that is FTSE ST All Share Index, we can see that the fund's portfolio composition is quite different. In particular, the fund has more industrial and technology exposures, offset by less financial and real estate. From a diversification perspective, this is good, as the Singapore equity market is heavily skewed towards the three local banks and various REITs. The top 10 holdings gives a bit more color on the active bets by the fund manager. We can see clearly the underweight allocations in the three local banks, although DBS at 20% of the portfolio is still a highly concentrated position. This unfortunately cannot be avoided, given the market cap of DBS is significantly larger than all other Singapore companies. We can also see some overweights in Singtel, Jardine Matheson, and Keppel, presumably due to the fund manager seeing better upside potential in these names. Morningstar indicates that the fund currently also has 102 stocks in the portfolio, which is a well-diversified number compared to many other Singapore equity funds and ETFs in the market. There is unfortunately no full holdings information available, so we can't go through more details on the stock selection in the fund. While missing in the fund fact sheet, Morningstar also has the market cap breakdown, showing the fund having a decent amount of allocation in mid and small cap stocks in the portfolio, again reflecting the relevance to change the benchmark from MSCI Singapore Index to FTSE ST All Share Index. For a Singapore-specific equity solution, the LionGlobal Singapore Trust Fund doesn't really need too many share classes. The first share class incepted in 1989 is the accumulation Sing dollar class. The accumulation US dollar unhedged class was created much later in 2004. That still gives it more than 20 years of track record. LionGlobal, however, started creating new share classes for the fund this year. The monthly distributing Sing dollars and US dollars unhedged classes were recently created in May. And there is also a special O share class with monthly distributing Sing dollar and US dollar unhedged versions created in March. Given these are very new share classes with hardly any distribution data available, I will not be reviewing the distribution yields and information in this video. All these share classes have the same management fee of 1.25%. Based on the long-running accumulation Sing dollar and US dollar share classes, adding other expenses gives a total expense ratio or TER of 1.39%. There will be some fluctuation in the TER of the new share classes until they gain enough AUM to stabilize. LionGlobal can pay up to 60% of the management fees to distributors as trailer fees. Besides the O share classes, distributors are allowed to charge up to 4% subscription fee for this fund, although I think anything more than 2% for mutual funds is excessive. I mentioned O share classes are special because they have no subscription fee but instead has a tiered redemption fee or realization charge, as shown here with an extract from the product highlight sheet. Since there are specific date ranges stated here, I assume the O share classes are created specifically for a distributor and will not be available for subscription after the launch. Generally, I dislike funds with redemption fee structures because it disincentivizes investors to exit early, thus impacting liquidity decisions. The tiered fee structure, however, means that investors who have a high certainty to hold the fund for at least 4 years will get no redemption fees charged. Of course, investors can also try to find investment platforms or distributors that do not charge subscription fees for the normal share classes to get the same experience without the liquidity impacts. Performance information of the LionGlobal Singapore Trust Fund can be found in the fact sheet that includes a cumulative returns chart and returns across various time periods in the table, both comparing with the benchmark. Again, do note that the benchmark was recently changed in March from MSCI Singapore Index to FTSE ST All Share Index. Broadly speaking, the fund has achieved decent outperformance versus the benchmark across all time periods, which is good. There are not many Singapore equity solutions with such a long track record. For a long period comparison, here is a 20-year chart of the fund versus ES3 from Spider, representing Straits Times Index, and EWS from iShares, representing MSCI Singapore Index. Again, I can't find an ETF tracking the FTSE ST All Share Index to add into this chart. The chart setting is adjusted to reflect Sing dollar returns for EWS. We can see in the chart that the fund has actually lagged behind the two ETFs during 2012 to 2020, but managed to pick up especially from 2024 onwards and ending this period just slightly behind ES3. EWS, on the other hand, lagged behind from 2022 onwards, mainly due to lower allocations into the three local banks. Here is a 5-year chart to show more clearly the changes since 2024, where the fund outperformed EWS significantly and quickly, and also clearing its previous underperformance versus ES3. I am not sure if there were any changes to the fund strategy back then, but this obviously shows a clear deviation from MSCI Singapore Index and moving closer to Straits Times Index, which probably prompted the benchmark change this year. Let's zoom in even closer to a 1-year chart and add in the other Singapore equity-specific funds I've covered previously. Here, we can see ES3, representing the Straits Times Index, is still leading the pack, although LionGlobal Singapore Trust Fund is doing pretty well and close behind. On the other hand, dividend-focused, low-carbon filtered, or REITs-focused solutions just can't compare in returns. Therefore, as long as the three local banks continue to do well, investors are probably going to prefer portfolios that overweight in them. Between the Straits Times Index and MSCI Singapore Index, it is clear that Straits Times Index has been a better performer in recent years. It is, however, a concentrated 30 stock play, so the LionGlobal Singapore Trust Fund with a broader portfolio and good returns since 2024 is a very promising solution for investors looking for better diversification. With that, let's summarize our findings. Lion Global Investors is an asset management business under OCBC. While the overall AUM doesn't look too big, it does get ample support from the wider OCBC businesses. The Lion Global Singapore Trust Fund is one of the oldest actively managed funds in Singapore, having incepted since 1989. The fund is managed by Erica Lau since 2014, providing stability in manager style for over a decade. Erica has over 23 years of industry experience and transited from US equities to Asia equities during her career. The fund runs mainly with a bottom-up focused investment approach, with some details provided on the stock selection criteria and investment process. Information on top-down macro impact to the portfolio construction is minimal though. The fund portfolio looks to be decently different versus the benchmark, suggesting active management at work that has translated to good performance in recent years. The fund benchmark was changed this year from MSCI Singapore Index that had been used for over 25 years to FTSE ST All Share Index. While I can't find an explanation for the change, the fund portfolio does have a broader market cap coverage and seemingly higher correlation with the new benchmark, so the change does make sense. The fund, however, seems to have started deviating from MSCI Singapore Index since 2024, performance-wise, so I am not sure why it took over 2 years for the benchmark change to happen. After so many decades, the fund suddenly decided to launch distribution share classes this year. I feel, however, the fund has a capital appreciation objective and therefore should just focus on delivering capital growth, as with what it has been doing for so many years. The fund also launched the new old share classes this year that have tiered redemption fees instead of subscription fees. As explained earlier, this fee structure is not suitable for everyone, so investors should think carefully before going ahead. I do think these share classes are probably a one-time creation for a specific distributor, so this shouldn't affect the majority of investors. The fund offers only Sing dollar-based currency classes and US dollar unhedged classes. Investors who are looking for US dollar hedged classes will not have the option in this fund, although I think US dollar demand for the fund shouldn't be too high. The fund has exhibited significant strong performance since 2024. As mentioned earlier, I think something must have changed in the fund strategy that led to the outperformance, but I can't find any details on it. While this is good, the challenge for the manager would be to continue to deliver strong outperformance versus the benchmark and typical market indices in a market environment that seems to be getting tougher. In conclusion, the Lion Global Singapore Trust Fund presents itself as a Singapore all-caps equity fund that is actively managed for long-term capital growth. The all-caps portfolio attracts investors that want more diversification from the highly concentrated Straits Times Index and MSCI Singapore Index. And the strong performance of the fund since 2024 provides evidence on the active management in the fund. The fund is therefore a worthy consideration for investors willing to move from the passive ETFs and index trackers to an active strategy that looks promising in recent years. This concludes my absolutely biased comments on the Lion Global Singapore Trust Fund, and I hope it will help in your investment journey. May we all grow wiser and prosper.